Hello guys, wherever you are. Welcome to my YouTube channel by the name Kenma Solutions, and I'm your host Kenneth Etende. Now, if you're catching up with my YouTube channel and you're wondering what it's all about, now Kenma Solutions YouTube channel is a channel I've designed to ensure you get the best quality up-to-date business information in the market in regards to finance, sales and marketing, human resource, and any other business related information. So stay tuned to this channel, guys, and it's my belief we shall be able to grow together and you'll be able to elevate your businesses to greater heights. Now, diving straight into this session's topic, I'll be discussing today about working capital and should it get strained, how do you go about it? Now, what is working capital? Working capital actually, guys, it's the difference between the current assets and the current liabilities. Now, when I talk of current assets, I'm basically talking about the cash you hold, the inventory, and what we call the accounts receivables. In other words, your customers' unpaid bills. And then when I talk of current liabilities, I'm basically talking about the accounts payables, or basically what you owe your creditors or your suppliers. Now, you need to strike a very clear balance between current assets and current liabilities because it speaks volumes about your businesses. Number one, it speaks volumes about your liquidity, that is of your business. Number two, it speaks volumes about the operational efficiency of your business. And number three, it speaks volumes about the short-term financial health of your business. Now, having a substantive working capital basically means you have the potential to invest and grow. Now, you might find yourself in a situation whereby your current assets are less than your current liabilities. That basically means you are not able to invest and grow, and you run the risk of financial distress, not being able to pay your suppliers in good time, and you run the risk of going bankrupt. Now, having said that, when you have high working capital, again, it doesn't mean things are well for you or you are doing, you are not operating at optimum, because basically having a high working capital basically means that you have or you are holding excess inventory or excess cash that will otherwise have been invested in other areas and you'd have gotten a return on it. Now, should you find yourself that your working capital is strained in your business, what do you do? Now, you approach your lending institution or your banker and request for an overdraft. Now, what's an overdraft? An overdraft is basically when your bank allows you to withdraw in excess of what is in your current account at an agreed interest rate. Now, when requesting for an overdraft, specifically request for an overdraft line of credit. Now, what is that? Now, an overdraft line of credit is basically a contractual time-bound relationship where the bank allows you to withdraw in excess of what is in your current account at an agreed interest rate up to a certain limit. Now, how do you get to access that? What you need to do is just, complete an application and sign it and get it to your bank. And then the bank will assess your credit worthiness. They look at your account. Now, what we call the turnovers, what comes in and what goes out. From that, they'll be able to make a decision on whether to decline or approve the same. Now, should the bank decline your application, that's not a reason for you, to get upset and think of leaving the bank. But you should look at the reasons as to why the bank is declining your application. Because basically you might find that there are issues that you can sort out maybe in a week's time and reapply and you get an approval for your application. So basically, the reason as to why the bank has declined your application gives you, it points to the weaknesses that might appear in your account that you need to solve out so that you can be able to get an application on the same moving forward. Now, should your application be approved, And then the available credit, that is the line of credit, might appear as part of your available balance as a customer. Or in other banks, you'll find that if you have a line of credit of 2 million and you've been using that account and you find that your balance is minus 1.6 million, or in banking terms, we say your account is in debit with the balance of 1.6 million, then basically what that means, you have 400,000 to use to withdraw, because you can withdraw up to minus 2 million. So basically that's it about line of credit. And then again, guys, what you need to understand is you must apply prudent accounting and finance, because remember, a line of credit attracts interest. So you must ensure that your business is able to comfortably absorb the interest that is charged on that line of credit. But I can assure you, it's the best way of managing your working capital. And then again, guys, should the line of credit drop because it's time bound, remember, and you haven't stabilized your working capital, you can request your bank to renew it, so that you can still utilize it as you stabilize your working capital. When I talk of drop, I mean it expires, because it's something that is time bound. So that's it, guys. So if your business is trading in terms of the working capital, that is, you're not able to meet your daily obligations as a business, now you have a solution to that. And for those who are not yet strained, next time, should you find yourself straining, you have a solution to your issues. So stay tuned to this channel, guys, and you'll be able to learn more moving forward, and I'll be glad to see your business prosper. So if you're watching this YouTube channel, that is Kenma Solutions, and you haven't subscribed to it, guys, please do so. Subscribe. And as you subscribe, guys, remember to click on the notification bell so that you can get notifications whenever I upload my subsequent videos. And then, guys, as you subscribe, remember to like and leave your comment in the comment sections, and I will be glad to respond on those comments. So that's it for this session, guys, and until next time, let me see you then. Adios.